Hey everyone, Micron Technology's business has always been a cyclical business with ups and downs and tremendous volatility in the business cycle. But that's even accelerated because of the unprecedented circumstances of the coronavirus pandemic. And then on top of that, the surge in effectiveness of artificial intelligence. All of that are changing factors dramatically for Micron Technology. So in this video, I'll provide an outlook on where Micron Technology could be by the end of the year and beyond. So its outlook, prospects, the business, where it's heading. So let's take a look at these interesting details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Micron's management team gave investors a really nice outlook of what's going on in the business for 2024 and beyond. So that's the insights I'm gaining and providing the analysis in this video. This is from Micron Technology Investors Relation website on their latest third quarter earnings conference call transcript. And Micron saying that they forecast calendar year 2024 bit demand growth for the industry to be in the mid-teens percentage range for both DRAM and NAND. So DRAM is memory, NAND is storage. So they are expecting mid-teens percentage growth for both of these categories. That's really strong. So mid-teens is 14%, 15%, or 16%. What management means when they're saying mid-teens percentage growth rate. So between 14% and 16% year-over-year growth for these two categories overall. And that's great news for Micron because they are one of the industry leaders in these two categories. They go on to say that over the medium term, they expect the bit demand growth of mid-teens for DRAM and then high teens for NAND. So this growth rate in the mid to high double digits was not just for 2024. In fact, Micron is expecting this mid to high teens double-digit growth rates for the medium term. Those are several years, 3 to 6 years perhaps. And so over the medium term, they actually expect NAND storage growth to be better than this year. So this growth is accelerating. That's great news for Micron Technology, again, because it's one of the leading players in an industry that's expected to grow in the mid to high double digits. Now, to make that even better is that when you look at supply, they expect 2024 industry supply to be below demand for DRAM and NAND, and that's great news. Now, if you're not already aware, I teach economics and finance at a university, and one of the things we talk about in every econ class is supply and demand, right? If you remember your basic economics class, you'll remember supply and demand, right? As supply increases, if demand stays the same, then prices are likely to decrease. But if demand is growing and supply is remaining flat or not growing as much as demand, then of course that's positive for prices, right? If you remember the supply and demand chart. So this is great news for Micron as well, that not only is demand increasing robustly, but the industry supply is going to be below demand. And that's going to allow for pricing power for companies like Micron Technology. It's going to allow them to charge higher prices because the demand is going to be higher than supply. Customers have to accept the higher prices because they will have no choice. There is more demand than supply, and so they have to pay whatever they need to in order to secure these products. Additionally, they expect these tight supply conditions for DRAM across all end markets. The industry is still recovering from the challenging environment in 2023, and this tight supply environment will help drive the considerable improvements in profitability and return on investment that are needed to enable investments required to support future growth. Again, great news here is not just that this supply and demand imbalance is for 2024, but it's likely to continue. And that's one of the main reasons why Micron is making big investments in expansion, which I will talk about a little bit later in this video, is because they're seeing these favorable market conditions and they're investing to capitalize on those favorable conditions. Now, Micron has to be careful in that its expansions are not too much where they oversupply the market and they reverse those positive trends because they overinvest and now there's more supply and demand is growing, but maybe not as much as supply. And that'll create the reverse of what they're benefiting from right now. So Micron says they will continue to exercise supply and capital expenditure discipline and focus on improving profitability while maintaining their market share for DRAM and NAND. And so they just addressed that concern that I just highlighted. They're going to be disciplined. They're not just going to invest and go over their shoes to capitalize on this growth, because they understand that if they overinvest and they increase supply by too much, these favorable conditions will reverse. And so they're going to be careful with their capital investment. And so in fiscal year 2024, they plan to invest roughly $8 billion for wafer fabrication equipment. And this will be a down year in 2024. But they expect to increase their capital spending materially next year with CapEx around 30% of sales, which is a high number. And that will support HBM assembly and test equipment, fab and back-end facility construction, as well as transition investment to support demand growth. Now, if you didn't watch my video on why Micron Technology stock price fell following the earnings release, this was the factor I pointed to. This was the factor I pointed to on why Micron Technology stock price fell after its earnings release, which seemed to be really strong on the surface. But if you looked deeper, these investments or these announcements of massive investments in the future spook investors for the reasons I discussed earlier, because investors like the supply and demand environment the market is in right now. And with Micron investing meaningfully in expansion, they are concerned that Micron is going to overshoot and that that's going to create too much supply, which is going to work to bring down price, which is going to bring down profitability. That's the concern here. That's the concern that caused the stock price to fall. I think investors would have preferred for Micron to more modestly, very modestly increase capacity and continue to capitalize on better pricing power instead of trying to increase supply. Just if there's too much demand and there isn't enough supply, just increase your prices instead of trying to make more units to fulfill the extra demand. So I think investors were a little disappointed in this decision. However, I said I thought it was a prudent move because of this next factor I'm going to discuss here. And so this manufacturing expansion is happening in the US. The Idaho, they're investing in 2 facilities, one in Idaho and one in New York. And it's not going to increase their supply growth until fiscal year 2027 and 2028 for the respective facilities. And the US government is giving Micron billions of dollars in grants in order to help facilitate the onshoring of semiconductor manufacturing. So that's why I say it's good timing, because demand is growing, yes, but also you have support for manufacturing expansion with billions of dollars of grants. So it's great timing to go ahead and increase manufacturing right now when there is growing demand and growing government support. So that provides some really good insight. I thought management gave investors really good insight into the future outlook on where the business will be, not just this year, but long after into 2027 and 2028. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.